So you want to get started in real estate investing, but you don't know where to begin? Well, you're in absolutely the right place by clicking on this video today. After watching this video, you'll know the 7 steps to get started in real estate investing. Let's make sure that we set you up with a plan of action and steps for success moving forward. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you're new here, please go ahead and subscribe to this channel now and like this video. For reference, I upload 6 days a week, so tap the bell icon and you'll get notified of the next one. Okay, team, so let's take a closer look at this. There's a lot of things that go into real estate investing, and there's people that do it extremely well and become multimillionaires and live a very comfortable lifestyle. Then there's the majority of people that get into it and don't see it through and fail and even lose money in the process. Let's make sure that you're in group 1, not group 2. You've likely already heard about the different benefits of real estate investing. It really comes down to 5 of them. So let's take a quick look at that before we get into the content today. And number 1, leading off with income potential. You have it through the active investing method of flipping properties or the passive investing model of rentals, right? The second one is depreciation. You can actually depreciate your asset over 27.5 years or whatever the current tax code is. Get with your tax accountant about that, because that can help you hedge your income to your losses and help you mitigate your tax issues legally. Number 3 is the equity that you gain over time. So if you're leveraging yourself, and in other words, you have a mortgage on that property and you have a tenant paying it off, they're building up the equity for you, because it's a beautiful thing when they're paying down the mortgage and you get to keep the main asset as the principal investment here, right? So number 4 is the appreciation. Markets ebb and flow, but historically real estate markets do go up. So over time and held long enough, you're going to have a massive amount of appreciation in your property, which means what? More equity for you. Number 5 is leverage. You can do more with $100,000 if you leverage it out. Maybe you can only need a 20% down payment on a $100,000 property, right? In that case, if you had $100,000 today, you could invest into up to 5 rental properties or 5 properties of your choosing, and you can make a lot of things happen. As opposed to buying 1 straight out cash, you would have 5 by the power of leverage and mortgage. So let's go ahead and get into the 7 steps. Now, step 1 is actually creating your financial goals. What we would like to take a look at and what we would like to identify is how much money do you need to quit your day job now? How much money are you going to need to live on going forward? There's a really simple calculation that you can do for this. Let's say that you earn $50,000 a year. You want to take that $50,000 and divide it by 6%. Now you're probably saying, where did you get the 6%? Let's assume that you're getting a 6% cash on cash return on your investment, okay? If that's the case, that means that you would need a net worth of roughly $833,000 to go ahead and quit your day job. How do you build up a net income or net worth of $833,000? By investing into real estate and go ahead and leveraging yourself just a little bit, just enough that's within your comfort zone and within your tolerances to get this done, so that you can buy these properties and you can have a net worth in real estate equity, right? Then you can take a look at your cash on cash return and identify when you're going to be ready to pivot and leave your day job in favor of your real estate investing career, whether you're going to be an active investor in the flipping world or whether you're actually going to be a passive investor in the rental world. The choice is yours, which path you take. They both have their own pros and cons. Step 2 is focusing on a real estate investing strategy and niche. You need to go through your business plan, set that up, identify your niche, identify your strategy. What kind of properties do you want to invest in? The world of real estate has so many different properties, and it's not just residential. It's not just all fix and flip. It's not just all rental properties. You have multiplex properties, you have duplexes, you have triplexes, you have commercial properties that are units of 5 or more, small apartments, big apartments, land, investing in mortgage notes. There are so many different avenues to approach real estate investing. It's about you choosing which strategy and niche works best for you and how you want to begin. So identify what you want to do and go ahead and take a look at a lot of the other videos I've made where we really dig deep into these topics to teach you more. Today is more about priming your thought process with 7 easy steps you can take right now and to know where to go next. So let's take a look at house hacking. House hacking is a beautiful thing. I actually really appreciate house hacking for those of you that are in a position to be able to do this. So house hacking is essentially whenever you buy a multiplex property, it can even be a single family property for that matter, that you have excess rooms and you can rent it out to family, friends, or whomever, or just attract new renters and they rent out a space inside that house. House hacking by definition, and what we're looking at here, is you buying an asset and the asset paying for itself and ideally profiting off of it from the rental income that's coming in. House hacking is a really good and really awesome way to get started in the real estate investing. I've talked about it before, especially as it pertains to duplexes, triplexes, quadplexes, but you can also do this with single family homes by leasing out the rooms within that residence for whatever the going rate is or whatever the rate is that you decide that someone's willing to be able to pay. So it's something to think about. House hacking is a beautiful thing if you're in the position to be able to do it. Then you also have the live-in house flip. So the live-in house flip, I'm probably a big proponent of that, to be honest with you. Every house that I buy, I will look for a home that needs work, and then I'll go in over a period of time and renovate it. The first property I did that to here in Las Vegas, Nevada, I ended up cashing out about $125,000 of equity, of profit on that house inside of 3.5 years of renovating that property. You can do that too by looking for those kind of deals in the market, or what seem like deals, right? If every other house on the market is selling in like 10 days because they're turnkey move-in ready, but you have that house out there that's been on the market for like 180 days, is not turnkey move-in ready, and it's really not in that bad of a condition, it just needs some updating, upgrades, or whatever, that seller's going to be more negotiable no matter what kind of market you're in, whether it's a seller's market, buyer's market, or a stabilized market. Something to think about, something to consider. So then we move into step number 3, which is understand the basics of good real estate deals. Now you might be wondering, how do we know this, Andrew? What are we supposed to do? Well, there's 2 different approaches you want to take a look at whenever you're understanding a good real estate deal. The first one is a quantitative approach, and the second one is a qualitative approach. And a quantitative analysis of real estate, what you're looking at is understanding what net operating income is and how it pertains to your situation and your business. Number 2 is understanding capitalization rate. Number 3 is net income after taxes. Number 4 is understanding your cash on cash return. And number 5 is understanding any price discounts. Okay, so I've talked about these things in other episodes. Make sure you pay attention to them and you go back and look at it and listen to other people that are talking about investing in real estate that you enjoy watching and you enjoy listening to, and come up with a strong plan of action to get your career on the right path. Now, the qualitative analysis of real estate is really interesting for the simple fact that a lot of investors, as you're going through everything, you're a numbers oriented person, you're looking at the numbers, you're assessing the property, you're identifying opportunity off of black and white paper and whether it makes sense. The qualitative approach is whether that property is actually going to appreciate, whether that property is actually going to become a good rental or flip opportunity. It's understanding where it sits in its location, and we're going to take a look, and I'm going to go over 12 things very briefly in the qualitative analysis approach that you want to consider when you're assessing the right property for you to buy, whether it's fix and flip or whether it's rent and hold. The first one is the safety of the location. Number 2 is the walkability and accessibility of the public transit. Number 3 are good school districts. Properties in good school districts generally are able to rent for more money, rent more easily, and also have a higher return on your initial investment in the form of home appreciation and equity gained over time. Number 4 is the population growth in the area. Is that a city growing or is that city dying? You need to know what the economic trends look like and whether people are moving in or moving out, or if it's just kind of stable. Number 5 is job and wage growth in the area. That's always important to know. It goes back to the economics of the situation. What are the employment outcomes? Are new businesses moving in or businesses moving out? Number 6 is outdoor living features like yards, patios, and gardens, etc. Things that make it more desirable to somebody living there and enjoying to live there and enjoying to pay you the rent that helps you get what you want in the lifestyle that you deserve. Number 7 is attractive interior finish. That could vary from market to market, but it is important to know what renters and what people like in your market, whether you're fix and flipping or whether you're renting. Okay. Number 8 is the storage space. People always love storage, and the more of it that they see, the more attracted that they are. So look for garages, storage lockers, or providing more storage in the form of cabinets or additional cabinets whenever you buy that property. Something to think about. Number 9 is quality construction and low maintenance materials like solid surface floors, exterior surfaces, and seeing exactly what is that building comprised of. Make sure it's a good investment for you and a good place for them to live. Number 10 is the interior layout. Avoid weird wall locations. I mean, depending on the age of the home will depend on how weird it can be, but generally right now people are appreciating open concept properties. You want to be able to walk through the bedrooms to get to the bedrooms. You know, that's kind of not so cool if you're like, I'm going to walk through this bedroom to get to the other bedroom. That's an example of a weird floor plan. An example of a good floor plan is when the bedrooms are separated, or leastways the master bedroom is separated and the flow makes sense. If you walk into that rental and you personally enjoy it and you would pay somebody to rent it, then likely somebody would pay you to rent it as well. And it's a good litmus test as to your thought process about the property. If you like it, someone else is probably going to like it too. Now, if you like those weird floor plans, well, maybe not so much, right? At the same time, be realistic and make sure that you're getting the right kind of interior layout in that property. Number 11 is avoiding obnoxious neighbors, dogs, smells, large power lines, noises. You can't control these things, and there's so many of them. So try as best you can to avoid obnoxious neighbors by scouting out the neighborhood neighborhood that you intend to invest in. Go by in the morning, go by at midday, go back in the evening, and take a look over the weekend and see what's going on in that location. Make sure that you're taking a very close look at it, because whom is going to be renting that property from you is likely going to be the same like and kind. You know, birds of feather kind of flock together, right? Probably going to be like and kind to the demographic, the actions of those and the behaviors of those in that area. If you're fix and flipping, you want to make sure that you're appealing to what the majority of the buyers are looking for in your marketplace when you do the flip. Otherwise, it won't be successful and you lose money. Then we go into step 4, which is building your real estate team. It's extremely important to have a strong team. Now, your team is really comprised of 10 different folks. So the first one is your trusted real estate advisor. Your second one is a real estate attorney for contract purposes, LLC creation and closings in some states. Number 3 is having a great certified public accountant or that specifically knows quite a bit about the tax code, preferably a tax accountant. Number 4 is a mortgage lender. You need to have a mortgage lender that you trust and enjoy working with, and one that'll hook you up with some investment type loans. Different loan officers offer different type of investment solutions. Get with one and see how it works for you. Number 5 is a personal banker. If you have a business bank accounts and lines of credit, you may need to have a personal banker. Number 6 is having a property manager, unless you're going to be self-managing your properties. I know self-managing kind of sounds like it's going to be sexy and everything, but let me tell you, whenever you start growing your real estate business, you're going to want to have a good property manager on your side, and you may find yourself after self-managing finding that it's for the birds and not for you. So you might want to be able to have that as a contingency plan, even if you intend to self-manage up front. Number 7 is you need a great property inspector. You need a home inspector that's going to hook you up during the due diligence period when you're purchasing property to give you the straight scoop of what you're getting yourself into and whether you're looking at a lemon or if you're looking at a gem. Number 8 are repair contractors. There's 6 in specific that you want to have for repairmen that are always ready to go with companies that you enjoy, trust, and like. You need an HVAC technician. You need a plumber. You need an electrician. You need a good pest control person. You need lawn care, and you need a handyman. With those 6 groupings of people right there, you can accomplish anything on your property, whether it's fix and flip, buy and hold, what have you, right? No matter what, you'll be well prepared. Number 9 is referral sources for new deals. Obviously, you need to be building up your rap, right? You need to be building up your rapport. You need to be building out your relationships and attracting other people to you, helping them and them helping you in return. Number 10, speaking of that, is networking and mentorship opportunities. If you're just brand new to real estate investing and checking this video out, and this is the first one you've ever seen, I'm going to drop a link in the show more description below to the National Real Estate Investors Association so that you can find a real estate investment group near you to get started right now. Step number 5 is to create a financing plan. Now, going back to building the team, right? Number 4 was your mortgage lender. You need to create a financing plan. What are you going to do? Unless you have a big pile of cash laying around somewhere, you're going to need some financing, right? So make sure that you go ahead and identify those things that you're going to need for your financing plan. Consider the source. Are you going to go through a mortgage lender, a local bank, a private loan, a line of credit, a home equity line of credit? What is going to be your approach to financing? Figure it out. Think about it. The terms, you specifically want to know what the interest rate is, what are the upfront costs, the fees, the points, the closing costs, etc. Number 3, you want to take a look at the length of the loan. Number 4, you need to take a look at fully amortizing or an early balloon payment. You want to make sure ideally you are not penalized whenever you pay off the mortgage early if you do that. It is something to consider and definitely something to think about. And number 5, of course, you want to know what the down payment requirements are for that investment loan product and the loan amounts available to you. Step number 6 is creating a plan to find deals. Well, how are you going to do that? Well, number 1, you got to be able to recognize a good deal. Number 2, you got to have your financing in order or your cash. Number 3, you need to have a strong referral network that gives you the inside scoop of what's going on with the real estate in your area. Number 4, you need to build marketing systems. Everything in this world, we're constantly marketing. All of us market ourselves. If you really think about it, everybody's a salesperson, everybody's a marketer. If you're in a relationship right now, you marketed and sold yourself to the person that you're with. Think about it. It's pretty simple, but it's true. And of course, you got to have that hustle. You got to have that moxie. You got to be ready to get out there and do the thing. Just don't be thinking about the thing and commit analysis paralysis. Get yourself out there. Give yourself a swift kick in the pants now and make this happen, because that takes us into step number 7, which is massive action. You need to take massive action. You lay out your plan. You know, if you just sit there and you're one of those people that are like a perfectionist, cool, that's awesome. I'm with you. It's great if it works out perfect. But here's the thing. How are you going to test that model? How are you going to test that perfect business plan that you spent all those hours, days, years, months, whatever, creating? You can't until you put it into execution. So take massive action today and get out there and make things happen for you, and ask yourself these following 3 questions before you get started. Number 1, are you really committed to real estate investing? Only you can answer that. Number 2, are you organized with your projects and on time? Number 3, are you willing to stick to this? Stick-to-itiveness and persistence is what's going to generate your success in your investing in real estate career. Now, here's what I want you to do. Tell me what you're thinking about this episode in the comment section below, along with the biggest takeaways and any of your advice you'd like to share with our community to help our team continue to learn and grow together. Now I'm going to go ahead and pop up my contact information. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, contact info is on the screen and down below. Now go ahead and take a look at these other videos that I'm popping up right now. And between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team. See you again soon.